Have you ever wondered what an IPO is? The term IPO is an acronym for Initial Public Offering, a phrase that might sound complex, but it's quite simple when you break it down. Imagine a company as an exclusive club. Initially, it's private, and only a select few like the founders or professional investors can be part of it. This is what we call a private company. Now, suppose the club decides to open its doors to the public, allowing anyone to join. That's similar to what happens when a private company decides to go public. The process of opening the doors to the public, or in other words, the transition from private to public, is what we refer to as an initial public offering, or IPO. But why would a company want to go public? Well, there are three primary reasons. The first is to raise funds. A company might need to expand, make an acquisition, or simply have a safety net for general corporate purposes. The second reason is when the existing private shareholders want to exit and sell their shares to other investors. The third is a combination of the first two. The company wants to raise money, and the existing shareholders want to sell some of their equity to other investors. It's worth noting that in the second scenario, the company itself isn't raising money. The company may not see any money from the IPO. The primary purpose of the IPO is for the founders and investors of the company to sell their equity. In summary, an IPO is a significant milestone in a company's journey. It's the process by which a private company becomes a public one, opening its doors to public investors. This transformation can be driven by various factors, including the need for capital expansion, the desire for existing shareholders to exit, or a combination of both. Understanding the basics of an IPO can help demystify the world of investing and business, making it accessible and comprehensible for everyone. So the next time you hear about a company planning an IPO, you'll know exactly what that means.